Well, I'm now being joined by the head investment research at AfriInvest Securities, Robert Omotunde, to look at some of those activities that took place at the markets last week. Good morning, Robert.
Good morning, Chief.
Holiday is over.
Yeah, back to work.
Right. Welcome.
Yeah.
Now, how would you describe what happened at the market last week? We saw the market open positive and traded positive for Monday and Tuesday, and then on Wednesday there was this sharp drop.
Yeah, first of all, it is worthy of note that there have been a flurry of positive news that have been driving the performance of the equities market. You know, the fact that towards the end of last year we saw a rebound in global oil prices, and even though when that happened we didn't see the direct impact on Nigerian equities, you know, until about February when the I&E window was introduced, and that was the major driver, you know, that has propelled the market thus far. And we have looked at the valuation of the market when you compare it with other markets outside the world, you know, and I mean in the world, and we found that yes, the market is still, still has a lot of room for upside. So what happened last week was more of investors trying to take profit on some of the gains that they've made, and plus the fact that we saw about 17% drop in global oil prices from $51 to as low as $43. That was what investors majorly digested towards the end of last week. So that news plus a cocktail of other negative news, so to speak, the Etisalat saga, you know, and the fact that, some investors have done so well for themselves, 50% over the 4-week bull run that we've had. They just thought about it that, it might be good enough to take profit at this time. All right.
Yep. Now, looking at the total market value of transactions as at Friday, that was about 3.2 billion. And in the peak of the boom period, we saw a total value as high as 6 billion. Now, is it safe to say now that the bears are back to the market, or are we hoping to have the bulls make a comeback?
Yeah, we have to be cautious thinking about the bears. For us, we do not think that the bears will have much room at this time. We understand the fact that the sentiment of the movement in oil prices drives equities in Nigeria, so to speak. You know, but from the analysis we've done and a few of other market players that we've spoken to, we are not sure that the major movers of the market, the foreign investors, are weary yet of Nigerian market. So it might just be a temporary bearish run, which would be overtaken by some bullish run in the later days. You know, but it speaks to the fact that we are saying that yes, equities market is fundamentally driven. So once you see anything that will fundamentally change investor sentiment, they want to take to safety naturally, because you know that equities market generally the world over is usually very volatile.
All right. Now, you talked about the Etisalat debt crisis. Now, should investors worry about asset quality of Nigerian banks?
For us, because for us to be able to dissect the full impact, you know, of these loans, for the banks that have exposure, we've looked at it and taken a position that most of the tier 1 banks, you know, may be able to weather the storm if the so-called bad loan. There are a lot of talks going on. Even the CBN has, intervened in the whole issue. But we have taken a position that even if that, again, is not able to resolve the crisis, the tier 1 banks are not likely to be majorly affected. You know, we fear for the tier 2 banks who are in that category. Of course, it's going to have impact on the quality of assets. You know, if you have to write off, you know, the amount of that loan, you know, it's going to have impact on the non-performing loan ratio, you know, of most of these banks. So no doubt it's going to have impact, but we fear more for the tier 2 banks that are that are part of the consortium of banks that
are affected by this. Now, do you think the banking sector is fully priced? Where do you see the value?
For us, we do not think that it is fully priced at the moment, because you have to look at vis-a-vis the fundamentals. If you see what happened last week was majorly dragged by the banking sector, which recorded the highest loss. I think the sector lost about 6.8%, and if you look at the pricing of the sector, price to book is about 0.8 times. We compare to other markets, Kenya, South Africa, most of them are trading at about one times price to book. So we think that the Nigerian banks are not fully priced yet. There's still room for a lot of price appreciations. We did a modeling on Guaranteed Trust, which is currently trading at about 32, 33 naira, and we imagine that if that stock should trade at about price to book of 2.5 times, you're going to be seeing GT trading at above 40 naira. So I mean that speaks of value for investors who are discerning.
All right, talking about you talked about the banks being the highest loser for the week, but let's look at specifically for Friday. The industrial goods sector lost heavily.
Correct.
On Friday, losing about 4.55%. Now, with the passage of the 2017 budget, I mean, it is expected that investor sentiment would actually be positive. So what's really happened?
Okay, so what we should note is that the industrial goods index is majorly driven by Danksem and WAPCO, which are the two most capitalized. I think the weighting of those two should account for up to 90% or thereabout of the entire weighting of that index. So whatever happens to Danksem or happens to Lafarge, we technically move the performance of that market, And if you say Danksem has been pretty stable at about 200 naira, but we've seen some, WAPCO shedding some points, and that was the major reason why you saw that performance last week. But again, tying that to the passage of the budget, we know that this budget is going to be focused majorly on capital projects, And we note that, a lot of the borrowings that have been done, even though we said it was for 2016 budget, the 1.5 billion euro bond that was issued at about February, this is going to have a positive impact on the performance of the cement manufacturers, hopefully, and it's one of the reasons why, but, the impact that you will see may not be immediate. So there will be a lag to when you begin to see the translation of the capital spending that is done today, and when those stocks begin to, be affected fundamentally. Yep.
Right, just a quick one before I let you go. Okay. So we just have a very short trading week. What are you expecting to see?
Well, we think that investors are going to reconsider their position. The major caveat to that is that this week marks the end of the first half of the year. It's the end of the first month, the end of another quarter. A lot of portfolio managers will be rebalancing their position. Some of them will take gains and may not necessarily return until when we move into the new year. So we expect the market to be soft this week.
All right. I can only say we'll remain positive and optimistic. Thank you very much, Robert, and welcome back from your holiday.
Thank you so much.
We'll take a quick break. When we come back, we'll look at the energy stocks. Do stay with us.